to the Easy Trip Planners Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Pitti, Executive Director. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to Q2 and H1FY24 earnings call of EasyMyTrip. I would like to thank you all for joining us today. Our earnings presentation and press release have already been uploaded on our website and stock exchanges. I hope you all had a chance to review it. To start with, I would like to begin by highlighting our remarkable performance for quarter and H1 of FY24, and we would be happy to take questions afterwards. Despite the lean period in travel industry during quarter 2 of FY24, I'm happy to share that we have continued our upward trajectory and delivered strong results for both quarter and the first half of FY24. During the quarter, we have achieved a gross booking revenue of 2,025 crores and achieved highest ever profit after tax of 47.2 crores. The PAT grew at 67% year-on-year. Adjusted revenue also reported a robust growth of 25.7% year-on-year, reaching to 212 crores for quarter 2 of FY24. As against 169 crores for quarter 2 of FY23. The EBITDA during the quarter was 67.7 crores, making an astonishing 68.1% growth on year-on-year basis with a margin of 46.8%. Overall, the revenue from operation for H1 FY24 stood at 265 crores as compared to 196 crores same period last year, registering a growth of 35.5%. EBITDA for the period was at 105 crores, registering a growth of 22.7%. The PAT for the period was at 73 crores, registering a growth of 19.3%. Our efforts in H1 of FY24 yield impressive results, with GBR growing by 20% year-on-year, reaching 4,396 crores, and adjusted revenue showing a robust 35% growth to 405 crores. Notably, our profit trajectory remained consistent, delivering a profit after tax of 73.2 crores for H1 FY24. During the period, our core segment, air travel booking, recorded 61.1 lakh bookings, registering a year-on-year growth of 20%, and hotel segment recorded 2.9 lakh bookings, registering a year-on-year growth of 90%. The other segments, covering train, buses, and few more, saw a notable spike of 66.8% year-on-year in H1 FY24. This robust growth is a testament of our resilience of business model, strategic focus, and unwavering commitment to innovation and customer-centric solutions. The key highlight for this quarter was our strategic shift towards a stronger focus on profitability rather than gross booking revenue. This change underscores our unwavering commitment to delivering long-term value to our stakeholders. Our primary objective is to achieve profit before tax of 250 crores for FY24, and we are well on our way of reaching this milestone. I'm delighted to share that our dedication to profitability has already yielded impressive results. Our profit before tax for H1 FY24 has reached an impressive number of 99.7 crores, representing 19.8% increase from the period of last year. We have executed several key initiatives during the first half of the fiscal year to drive this growth. Our strategic acquisition in Guidelines Travel Holidays, Trip Shopee Travel, and Zoom Travel are targeted towards enlarging our market reach and nurturing growth of easy trip planners, leveraging their expertise in various travel industry sectors. This shall help by offering niche services to our vast customer base. Moreover, our collaboration with Due Digital Global Limited and Blue Smart, along with introduction of Corporate Travel 2.0, signify our commitment to innovate sustainably and customer-focused travel solutions. Our partnerships aim to provide excellence in administrative services, promote green mobility, and offer diverse real-time online booking options to our corporate clients. Expanding our presence in North India, we have launched our franchisee outlets in Ludhiana, Jalandhar, Delhi, and Agra during this quarter. These outlets signify a substantial expansion in our network, designed to enhance services including tailored travel experiences, increased business sustainability, and a focus on offline customers. Our GCC business has also seen a growth. Moreover, we are looking for a strategic partnership for our Middle East business to run it together. In conclusion, EaseMyTrip has delivered a strong performance in Q2 and H1 of FY24 with robust sequential and year-on-year growth. We remain focused on our growth strategies, and we are confident that our strong foundations and unwavering commitment will continue to drive our success. Thank you, and I would like to open the floor for Q&A. Over to you, moderator.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bala Murali Krishna Janalagan from Oman Investment Advisors. Please go ahead.
Hi, good afternoon. Congratulations on great set of numbers. So regarding this EBITDA margins, so in the last 3 quarters, we can see they are up and down. So what could be the stable EBITDA margin we can expect from this year and upcoming years?
See, EBITDA margins, changes on the basis of the business decisions and the calls which we take. In this particular quarter, you must have seen our profitability has gone up dramatically for multiple reasons. One is we have also experimented charging customers convenience fees. And also we have reduced our marketing budget dramatically for this particular quarter compared to the last couple of quarters, which is why you would see the EBITDA margins to go a little bit up and down on the basis of the business call. Hence, for the future as well, I may not be able to give any guidance, but we are very happy with the current quarter results, and the current EBITDA margins could be kept as a baseline for the future as well.
Okay, and regarding the sales expenses, so 0.7% of GDR, it will continue, or we may see any upticks in any further quarters?
You mean marketing and sales promotion? We look forward to continuing with this number.
Okay. And regarding that, our target, PBT target of 250 crores, so I think we are on the track. So we have completed around 100. So in the upcoming 2 quarters, we are expecting 150 crores PBT, right?
So as a growing company, our Q3 and Q4 are always better than Q1 and Q2, since the company is also growing. Which is why, if you see, every year in our performance, our H1 is usually about at 35%, is usually about at 65-70% compared to our H2. And hence, we are well within our target to reach 250 crores of PBT in this year.
Okay, that's all. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead. Manik Taneja, the line for you has been unmuted. You may proceed with your question.
Hello. I hope I'm audible.
Yes, you are audible.
Yes.
Hello.
Yes, Manik, you are audible.
Yeah, Prashant. So just wanted to get your get your thoughts on a couple of things. In the past, you had spoken that you would look to double our GBR in FY24. Does that target essentially still hold? That's question number one. The second thing is that if you could also talk about what prompted you to essentially do away with your no convenience strategy, because that was the USP for Ease My Trip. And how should we be thinking about this from a go-forward standpoint?
Thank you, Manik, for asking both the questions. Yes, that is correct. The first, the target of GBR to doubling up does not stand valid now, since we are focused on profitability. It's a very thin line which we have to balance. As a company and the board, we have decided that we will be focused more on profitability this year, and hence we have committed a PBT growth of 250 crores for this particular year. And answering your second question related to zero convenience fees, as I've said that in this particular quarter, we have experimented to charge customers convenience fees. In many cases, when customer pays convenience fees, they also can apply a discount coupon, which is why you would see in this particular quarter the discount to the customers has increased. Because in some cases where they are paying convenience fees, they would still have the option to avail other discount coupons. So it's an experiment to the company. We are not saying that we have gotten away with removing the charging convenience fees to all our customers. But this definitely shows that there is so much amount of upside which is still in the company in terms of profitability, that even with the experiment we have been able to increase our PAT dramatically in this particular quarter. And as I said, that this is an experiment, and companies get to decide on how to take this in the long forward basis.
Sure. Just a clarification on this particular part. In the past also, whenever the customer essentially would use a discount coupon, there would be a convenience charge. Is it any different from the way it used to work earlier?
It's the same, but in certain sectors, what we have done is we have removed the no convenience fees, coupon which was automatically applied.
Okay. And finally, just to prod you further on that GBR outlook, I understand the focus essentially is on profitability maximization, but for any P&L, the working always tends to start from the top. And thereby, how should we be thinking about our GBR growth now for FY24?
It would be hard for us to comment at this particular moment. Our GBR has done better for H1 23 compared to H1 23. Our H1 24 GBR numbers are up by around 20%. And we would want to continue focusing on the profitability. And hence, the focus on GBR is slightly lesser for this particular year. So but nonetheless, it would continue to grow.
So should one assume probably a 20 to 25% kind of a growth in GBR for FY24?
That seems like a realistic number to look at.
And finally, a clarification question on the marketing and sales promotion before I get back into the queue. These expenses have come down to about 0.7% of GBR this quarter. In the past, you had talked about this number being 1 to 1.1%. So on a go-forward basis, what should be the outlook on this front?
Again, we would take these calls as for every particular quarter. Depending for this particular quarter, we wanted to maximize our profitability, as I mentioned. And this year, we have a goal of attaining to 50 crores as profitability, profit before tax. So we would basically take this call as per our needs and as per our targets.
Sure. Thank you and all the best for the future.
Thank you.
Thank you. The next question is from the line of Sakshi from Swan Investments. Please go ahead.
Yeah. Hi, sir. I wanted to understand that even though the bookings have gone up in this quarter, what has led to a decrease in the payment gateway charges?
Payment gateway charges basically as a percentage was 0.7. Now it is 0.6. As more and more UPI gets adopted, the payment gateway charges reduces for us because we pay almost negligible payment gateway charges if people use more UPI to make the transaction. So, in fact, this is one of a very big upside which is waiting for our company. As more and more UPI transactions happen, this 0.6% should also further reduce.
Okay, that's great. So, what would be the percentage of the UPI users as a percentage of the total users?
See, I think about 30-35%, if I am not correct, if my memory is serving me right, 30-35% of our transactions are UPI and remaining are non-UPI transactions at the moment.
Okay. Other thing I wanted to understand was on your hotel package revenue. So even though on a quarter-on-quarter basis, the volume is down, can you explain the increase in the revenue that we have reported?
So the overall hotel bookings have increased compared to the last quarter by 60%. So I don't know when you're saying that it is quarter-on-quarter basis it is down. What do you mean by that? You can't compare quarter-on-quarter. Quarter one versus quarter two are very two different quarters. Quarter one is very high on tourism, while quarter two is usually not is a leaner period, and hence it's better to compare compared to the last year rather than compare quarter-on-quarter. Each quarter exhibits a very different kind of behavior, as travel is a very seasonal business.
No, right. That's fine. I mean, I understand the seasonality. I just want to understand that the revenue that we have reported for the hotel business this year is close to 13 crores, right? Whereas the same in the last quarter was 1.8 crores. So I'm not able to understand how we have seen such a sharp increase in the revenue.
Oh, okay. So basically, there are MICE. It's not just a hotel; it is hotel and holidays. And if we get a MICE booking, that also gets reported into it, and that could be one of bases as well.
So, but in terms of your overall volume would be lower in the second quarter, then how can the revenue jump from 2 to 13.5 crores?
Ashiji, do you want to explain that on that particular part?
Yeah, because we are comparing with the previous quarter, but if you compare, it is last year same quarter, it was 9 crore, as against 13 crore in this quarter. And last quarter, basically, we paid the discount in hotel business. So that's why the revenue, net revenue was flat.
Last year same quarter, it was 1.7 crores.
No.
So revenue basically...
1.7. It's the half year number, sorry. 9 crore was the 6 month number, and 1.7 was the last year number.
Right. So I just want to understand that is there a difference in the reporting, or is that the discounts were much higher earlier, which is not the case in this quarter? Can you explain that a little better?
Yeah, earlier discount was higher.
So that's the only reason.
Yes.
Okay, thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Madhuchanda Dey from MC Pro. Please go ahead.
Hi, I have a couple of questions. Hello. Yeah, the first one is a little bit of a housekeeping one. In the 141.7 crore revenue that you have reported in this quarter, what would be the share of the convenience fee charged?
We do not disclose the breakup. Just like any other competitor, we usually don't disclose the breakup between the various ways by which we earn.
Okay. So, the reason why I'm asking you this question is because the adjusted revenue to GBR, which was hovering in range of 8%, because the only revenue stream was a take rate from predominantly airlines, that has now moved up to 10.5%, obviously because of this, the convenience fee you're charging. So for us to model, your future revenue stream, how do we go about it honestly without knowing this number?
So, Madhu, that's a fair question. For the time being, we do not disclose the breakups, just like our competitors. At this moment, I would just encourage you to look at the current numbers and wait for the next quarter.
Fair point. So, which means that if you could throw some color on whether there was a change in the take rate, or the take rates have almost remained the same.
Again, those are basically it's a very confidential private agreements between us and the airlines. None of the OTAs share the exact breakup of the take rate. Again, I would not be eligible I would not be able to say that, but there are multiple things which we have done. There is some, the GSA also has begun from this particular quarter. Then we have also experimented with the convenience fee, as I mentioned earlier. So there are multiple factors, which is, and there are multiple efforts as well from the entire team side, which has made our adjusted revenue take rate jump from 8.2% to 10.5%.
Okay, so now I have a slightly broader question, and I would really appreciate a little detailed answer on this. There's a big strategic shift that we see in this quarter. Your focus used to, whatever you had guided earlier was like a 50% jump in GBR. Your ad sales promotion would continue to remain elevated, and you want to really not let go of the market share. So there is a big shift that we see this quarter. What prompted the shift, and what happens to the market share?
We are growing still better than the overall market. So hence, there's no thoughts of me letting go of the market share. We would want to continue with the market share we have and gain a little bit more. However, as a strategic call, we have taken a call to be more aggressive on the PBT side rather than the GBR side. But nonetheless, PBT can only exist if there is GBR. So it's not that we want to not focus on GBR side at all, but it's just that the company has taken a call of ensuring a very healthy profit for this particular year.
And my last question is on the receivable from GoAir, which you last disclosed was something like 70 crore. I have two sub-questions. A, if the figure is 70 crore, it's higher or lower? And secondly, do you intend writing that off from the P&L this year?
Ashish, if you may answer.
Yeah, we are reviewing the same, and we are hopeful that the airlines may start in this year only. So we will take a call after convenience of the matter.
Sir, what is the outstanding as we speak?
The outstanding we have disclosed is the 72 crores.
72 crore. Okay.
Yeah.
So, I had asked this question last quarter also. What is your policy with respect to receivable? Every organization has got some 180 day, something, some policy.
Days, yeah, we have policy, but it's the management decision and subject to board approval. So, but largely our policy is 180 days.
Okay, got it. Thank you, sir. Thanks and all the best.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Aditya Chandrasekhar from UBS. Please go ahead.
Yeah, hi. Thanks for taking my question. I just wanted some color on the hotel side. So firstly, what would be the contribution to overall gross booking revenues from the hotel side? And kind of looking ahead, what is your outlook here? What can the share of hotels go up to? And does this kind of change with your change in focus towards profitability? Do you think that hotels with a higher take rate can kind of lead to this higher profitability focus also? Just wanted to get your broad sense on it. And specifically for this quarter, maybe what was the share of the gross booking revenue? That will be helpful. Thank you.
No, thanks for asking this question. If you see our results, even for this particular, half year or quarter, where for the half year, let's say our flight segment grew by 20%, our hotel grew by 90%, and our other services, bus, train, and others grew by 66%. So clearly, there's a very strong focus on the company side to be able to grow our hotel and other businesses, and the results are for there to see. The numbers are growing, and this number grew even despite us reducing our discounting in hotel segment. Even afterwards, the number grew pretty significantly. And since we have been listed for last 2.5 years, more or less, every year or every quarter, I would say that we have delivered growth in our hotel number. So the hotel number at the time of listing, which was almost insignificant, has come to a significant position. In terms of percentage of GBR, Ashish, have we specifically disclosed that number?
No, we have not disclosed that number.
Correct. So that number is not disclosed, but we take this as a request. From next time onwards, maybe we can start disclosing this number as a percentage of GBR.
Thank you. And going ahead, could you just touch upon like what your focus would be? Like, are you still planning to further expand this and kind of focus on this segment?
Absolutely.
Especially after this focus on profitability. Yeah.
I mean, this basically decision is regardless of profitability, because hotel is anyways a better profitable segment. So hotel business, we have been growing, as I said, in the last 2.5 years of being public company. We have continuously grown our hotel business, and we continue to grow this business and make it as a larger chunk of our overall business.
Got it. Thank you. Just a small request, if you can give the gross booking revenue split between air, hotels, and buses from the next quarter, that will be helpful. Thank you.
Sure.
Thank you. Participants, if you wish to ask questions, you may please press star and 1. The next question is from the line of Shreya Mehra from Bonanza Portfolio Limited. Please go ahead.
Yeah. Hello. Am I audible?
Yes,
you are audible.
Yeah. Thank you so much for taking my question. I would want to touch upon the question regarding marketing and sales expenses. In the previous quarter con calls, you had mentioned that those will be at an elevated level. Although we see that in this quarter it's come down to 0.7%. Right. So I just wanted to understand your guidance on the same for upcoming quarters.
So in the last quarter, the number was about 1.1%, which at that moment we thought that we would want to continue with it. But the company has taken a call to reduce the marketing expenditures and focus on the profitability, and the results are for us to see. The company has done fantabulously well in terms of profitability. This is our highest ever PAT which we have ever reported, 47 crores. Going forward, you could assume that the number would hover anywhere between 0.7 to 1%. We cannot be very specific that it would be around 0.7 or 0.8. It would basically depend a lot on competitive intensity and discounting which we are offering. It's a combination of multiple things. At this moment, I can say that it could vary anywhere between this number and 1% in the future as well.
Okay. That answers. One more question which I would like to ask you is regarding your Diwali discounts. So I wanted to understand what kind of impact can we expect in the upcoming quarter regarding these discounts which you've recently launched. And as a percentage of GPR, the discount percentage is currently at 4%. So just wanted to understand, whether we can see an increase in that percentage or, what kind of impact will that have in the next quarter?
Again, it'd be very hard for me to give any guidance around it. But one easier way for you to look at it is that if you see our quarter 3 of FY23 results, because that time also there was Diwali festival. So that would give you a decent guidance on how discounting changes from quarter 2 to quarter 3. And probably something similar is something which you can expect for this quarter as well.
Sure. Thank you so much.
Thank you. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Hi, thank you for the follow-on opportunity. Just wanted to clarify, Prashant, on one thing. In the past, in some of your media interactions, you've spoken about targeting a PAT of 250 crores. So from that standpoint, is this a revision in the outlook?
I've always maintained profitability of 250 crores. This time it's better disclosure. It's profit before tax, is what you mentioned.
Okay. And the second question was with regards to the arrangement that we had with SpiceJet, wherein we were looking to essentially get into a collaboration, and by virtue of which we would essentially get higher take rates. Is that what is driving much higher profitability or take rates for us in the current quarter? And if you could help us understand that arrangement further.
So yes, we have a GSA with SpiceJet and it began from 1st of August of 2023 onwards. So there is an impact of that. And but as you would also know that the SpiceJet's overall percentage is around 10-11% of the total market share. So that's the level of impact it would probably bring to the table.
Okay. And finally, once again, trying to understand this statement on the hotel booking numbers and the hotel and packages revenue numbers. When one looks at the volume numbers, that number essentially on a sequential basis is down very sharply. But when I look at that revenue number, that number essentially has gone up from 1.9 crores to about 13.6 crores. So just trying to understand the accounting treatment over here because of which we are seeing this discrepancy.
So there is no accounting discrepancy over here. It's just that in the revenues, we have to subtract the discounts which we have given to the customers. That discount gets subtracted. So hence, if the discounts, let's say if you're getting 12-13% commission from the hotel vendors, and if you provide the entirety of that money to the customers as a discount, then essentially our revenue becomes almost zero. And if we keep, let's say, half of it for ourselves, you see a significant jump in that particular number. It's basically a function of how much discount are we giving to our customers on the hotel and packages. And on the basis of that number can see a spike. Last particular quarter, we saw a loss overall in the hotel numbers, probably because we gave a little bit more discount, as I mentioned in my past call. And this time we have corrected ourselves.
So just to clarify on the discounting number, if I look at that blended total discount to customers, that number increased from Q1 to Q2, both in absolute terms as a percentage of GBR. So did we give more discount on other segments and thereby that is explaining the...
Correct. That makes sense.
And what would be these elements? Would it be airlines? Because then it basically...
Yes. See, overall it is airlines. As 90% of our business is still airlines, it would be airlines, right? So hence the airline probably got slightly more discounts and hotels got a little bit lesser discount, and hence even when the hotel got a lesser discount, on overall basis you are seeing more discounts in this particular quarter.
No, so slightly confused with this. When you, on the same side, you are saying that we are now trying to be much more prudent, less discounting, even charging convenience fees in certain sectors. And then when you are saying that, yeah.
In the flight sector, what happens is if we are charging convenience fees, customer can avail other discount options.
Okay.
So which is why discount as a percentage for flight has gone up. In the flight segment, specifically, there's zero. If we are charging convenience fees, we give customer an option to choose any other discount coupon, which is why the discount went up.
No, but by that logic, then the net take rate should not be changing. Your gross take rate increases, your discounting increases, and thereby net take rate should not be increasing. In our case, what we've seen is that net take rate has gone up.
But not in all cases people choose to apply a discount coupon.
Okay. Sure, I'll take it offline. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you. Thank you everyone for joining us here today. The quarter ended on a positive note. We remain optimistic for the strong growth trajectory for our comprehensive portfolio of the services and excited about the opportunity that lie ahead of us with a strong value proposition to deliver sustainable performances. We look forward to meeting you in the next quarter. Please stay safe and healthy and feel free to reach us in case of any questions that remain unanswered. Thank you once again.
Thank you. On behalf of Easy Trip Planners Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.